My journey of insurance and investments began at the same time.
All right, ladies and gentlemen, welcome back. We have the privilege of having with us a thought leader who comes with an unparalleled expertise in the financial and the insurance segment with over 37 years of experience. Can we give a loudest round of applause for Mr. Rakesh Joshi, Member Finance and Investment at IRDAI, and we all know how important and compelling role IRDAI plays in terms of regulating the insurance businesses around India. And to formally welcome and render introductory speech for him, can I call on stage Mr. Dobhal, editor at Business Standard.
Thank you, Riddhipa. And good morning, everyone, once again. On behalf of Business Standard, let me extend a very warm welcome to Mr. Rakesh Joshi, Member of Finance and Investment, Insurance Regulatory and Development Authority of India. Mr. Joshi assumed charge as member of IRDAI on March 22nd, 2022, with a term of 3 years. Like Riddhima said, he has more than 37 years' experience in the financial services industry. At the end of October, Mr. Joshi was made the head of the 15-member Health Insurance Consultative Committee set up by IRDAI. The committee, which is also have a term of 2 years, has been tasked with identifying the challenges to increase health penetration in the country and making suitable recommendations to overcome them. The committee, whose aim is to achieve the goal of universalization of health insurance in the country, will identify problems in the entire health sector, largely the insurance value chain, and make appropriate recommendation. It will also recommend ways to facilitate and ease doing of business in the health insurance sector. Mr. Joshi is a BSc graduate from Presidency College, Kolkata, joined India's largest lender, State Bank of India, as a direct recruit officer in the cadre of probationary officer in 1984. He is formerly Executive Vice President and Group Head, Debt Capital Markets at SBI Capital Markets. Many thanks, Mr. Joshi, for joining us, and may I invite you to please share your address with this audience and thousands who are watching this proceedings live on our website, the YouTube channel, and Facebook. Please, Mr. Joshi, all yours.
Namaskar. It's a pleasure to be addressing the movers and shakers of the BFSI world in this BFSI Insight Summit 2022, organized by Business Standard. Well, all those things which were spoken about me, I don't know how much of that really matters, but having said that, my warm greetings to fellow regulators, Mr. M. Rajeshwar Rao, Deputy Governor, RBI, Mr. Ashwini Bhatia, whole-time member, SEBI, the Business Standard team, and all other distinguished delegates present at this August meeting. India is at an inflection point. The resilience that India has shown in the face of global headwinds has been globally acknowledged. We are poised for yet another growth spurt. We are the world's 5th largest economy, and by 2030, we will be the 3rd largest economy as per projections. In the insurance sector, India will be one of the main drivers of global insurance industry growth over the next decade. Today, we are the 10th largest insurance market and also one of the fastest growing markets in the world. India is projected to be the 6th largest insurance market by 2032, ahead of Germany, Canada, Italy, and South Korea. This growth is based on the expectation of strong economy, rising levels of disposable income, young population and demographic dividend, increased awareness, digital penetration, and regulatory developments. In the past, insurance as need, as also as a sector, did not elicit enough attention towards financial inclusion. However, The renewed focus by the government and growth in economy resulting into higher disposable income levels has led to a paradigm shift in the discretionary spends, turning insurance into one of the primary needs. When combined with the economic growth drivers, I am sanguine that the insurance sector has finally come of age. With a total premium income of more than 9 lakh crores in the financial year 2022 and AUM of more than 54 lakh crores, the insurance industry has registered around 20% year-on-year growth till October 2022, which is a quantum jump when compared with the last 5 years CAGR of around 11%. That there is an enormous opportunity in the insurance sector is brought out by the fact that around 19 applications are under process with us at IRDAI for setting up new insurance companies. The distribution framework is also moving towards open architecture. More flexibility and autonomy is being provided to the boards for taking business and operational decisions. Investment landscape is being rebuilt to attract more investments into the sector. And also, grievance redressal systems are being made more responsive, empathetic, and tech-enabled. The regulatory and supervisory regime is being made more principle-based. You would have seen that in the recent regulations which have been coming out from IRDAI. Business decisions is more board-driven, while the regulatory guardrails have been put in place to protect policyholders' interests. With the recent increase in FDI limits from 49% to 74%, more room has been created for investors to further strengthen their foothold into one of the fastest-growing insurance markets in the world. Not only this, Indian insurance industry is in the forefront of digitalization, which goes beyond telematics and customer risk assessment. Funding in Indian insurtech companies rose from just USD 10 million in 2016 to USD 800 million in 2021, accounting for almost 6% of the total global funding in the sector over the same period. Insurtechs from India are among the few insurtech companies globally that have crossed the USD 1 billion valuation mark by 2021. In respect of return on equity, non-life and life insurers have registered an average return on equity of 18% and 14% respectively. The insurance sector has a very important role to play in nation building, and till now, the insurance sector has not been recognized as so. Apart from providing financial relief at the time of when a covered risk defaults, thereby saving the government precious resources, like whenever there's a flood or a cyclone, the insurance companies invest their resources in nation building by way of investments in central government securities and state development loans, and in infrastructure housing. They are also key players in development of the corporate bond market. As on 31st of March 2022, the insurance sector's outstanding investment in central government securities stood at 22.0 lakh crores, which is about 25.89% of the total central government securities outstanding. This is second to the investments made by the banking sector, which was at 37.55%. In respect of the state government securities, the insurance sector's share of investments was 12.53 lakh crores, which is 28.42% of the outstanding state government securities, second again to the banking sector, which was at 34.8%. Given the patient nature of the insurance AUM, especially on the life side, these investments would keep growing as the penetration increases. The Government of India has also come out with a proposed amendment to the Insurance Act 1938, which are dynamic and game-changing. All this is significant for the development of the insurance sector, enabling more avenues, more freedom, more choice, more flexibility, more competition, more innovation, and last but not the least, more ease of doing business. All the recent facilitation and creation of enabling environment was the need of the hour and has been rightfully done so. But whether this pace of growth and facilitation alone be able to cater to the insurance needs of 140 crore Indians, their lives, their business, their property, their health, what is it that we need? We need to have all the required insurance products on offering. India is a country for the youth. The traditional distribution channels should be able to cater to the dynamic needs of the millennials and the Gen Z. Insurance covers all sectors, be it life, be it health, personal accident, shipping, cybersecurity. Therefore, cross-linkages across sectors are required. In order to take insurance right to the villages, insurance transactions have to be more seamless and more customer-friendly. The insurance industry would need to work towards insurance awareness, availability, and affordability. How do we do this? We are a diverse nation with extremely diverse needs. In order to cater to those, we need to think out of the box, embrace technology, and provide meaningful solutions to all financial needs of the country. The recent COVID-19 pandemic is a case in point. While it taught us the importance of healthcare in general, it has brought to fore the pivotal role played by the insurance as robust risk mitigating tool. As seen from the latest statistics, insurance industry had covered more than 29 crore lives during FY22. Another 50 crores lives were covered under the government flagship program, Ayushman Bharat. The insurance sector worked tirelessly to ensure that help was there when needed during the COVID times. And my congratulations to the insurance industries for that. In addition, around 14 crores lives have been estimated to be covered under other social insurance schemes such as ESIC and CGHS. But we have a huge protection gap at staggering 83%. Almost 50% of our vehicles are uninsured. The coverage of property insurance is minuscule. Our MSMEs are not adequately covered. This huge protection gap needs to be bridged as we march towards achieving our vision for India at 100, with a goal of insurance for all, wherein every citizen should have adequate insurance cover. How can we do this? There's a huge market which is still untapped, and there's a large section of population which is missing the facilities of financial aid and insurance. About 30% of eligible population, that is the missing middle, are deprived of health insurance solutions. There's an urgent need for two stakeholders, the insurance companies and the caregivers, to collaborate and work in synergy to ensure that a satisfying experience is delivered to the most important stakeholder, the policyholder. The National Health Authority has been in the forefront to solve for claims experience and have developed the health exchange, which would ease the customer journey through the entire process. We are drawing on the experience of renowned doctors to establish standardized processes and to suggest ways to make the entire health insurance more responsive to the needs of the people. We should be, by the time we close this, we should be able to say that if a person goes to the hospital after his treatment, when he comes, the entire claims process should be so smooth that the insurance company calls him up and says, "How has your treatment been?" He's given a fare back home or a ride back home in the taxi, and then he's asked if everything is all right. That is what insurance should be, not the patient running after his claims. The development in the insurance sector is not complete without reach to all sections of the population. The objectives of sustaining stable growth and minimizing costs go hand in hand. The exclusion of those in the bottom of the pyramid and targeting the upper income strata would result in development objectives going askew in the long run. The future of India lies in its villages. We have embarked on an ambitious plan, again, with the help of our insurance companies. The insurance companies have adopted a state each, and with the help of state government machinery, are looking to develop the state-level insurance plan. Much like what has been done in banking, which is the state-level development plan. The lead insurer of state, along with the state government machinery, seeks to increase insurance penetration at block and village level, as also look to design bespoke solutions which could be replicated across states. Today, most of our insurance companies operate at a national level. There's arguably a case for having differentiated operations which cater to niche sectors. The same way we have NBFCs and microfinance institutions in lending. The capital requirement for such niche players may not be as large as those for those players with national ambitions. Enabling these niche players, which may require lower capital, would enhance the penetration in areas which hitherto had not seen much traction by the larger players. The insurance agents form an important part of the insurance ecosystem. The advantages of localized community-based force are manifold, not to mention the trust factor that the agents enjoy being part of the local community. Further solutions need to be simple, parametric, and rather than complicated legalese, which a team of lawyers, my apologies to the lawyers here, need to interpret. In order to enhance this insurance force, we are contemplating the concept of Bima Vahaks. Each Gram Panchayat would have a Bima Vahak who would be tasked to sell and service simple parametric bundled insurance products, which we call Bima Vistar, covering health, property, life, and personal accident. Given that the requirements may differ from individual to individual, this bundled product could be bought in units of sum insured. App-based infrastructure would be put in place to ensure that the policyholder's journey is seamless, whether at the point of sale, or at servicing, or at settlement of claims. The Bima Vahak, the agent, would benefit in a wider reach and lower cost of infrastructure on account of the app-based solution. Opportunities are huge. It's time we tap them. Today's India is digital, pioneering in digital inclusion with more than 65 crore people having access to the internet. As you know, 8,800 crores digital transactions amounting to 3,200 lakh crores took place in FY22. In such a scenario, we need to build the technology platforms in the insurance space for the overall interest of the policyholders. We would need to leverage the India stack, no doubt with the policyholders' consent, and within the overall guardrails of personal data protection to enhance the customer experience. The customer experience of seamless onboarding, servicing, and settlements would definitely go a long way in making insurance a pull product as against the present-day push product. With the availability of many more data points from the data stacks, the way underwriting is done would also change. Why should I be given a benefit if I'm going for a life insurance policy and I am a driver with 17 challans and 3 accidents? Why should I be given the benefit of a premium which the other person who is not a driver and who has had no challans, why should he pay the same premium as I do? That the India stack will solve. We have the millennials and the Gen Z today. And trust me, they look at the world very differently. Their needs are not very conventional. They are intelligent, aware, and very digitally oriented. And I see many of them sitting here today. They want everything on a tap or a click. And believe you me, if we are not building now, we are going to lose in the long run. The deployment of artificial intelligence, advanced data analytics, Internet of Things, as well as other enabling technologies and emerging technologies and data-driven tools are changing the way the insurance is transacted globally. Companies need to innovate much faster to adapt to the new needs. Technology may be one of the main solutions for insurance companies and also for the distribution partners for offering seamless service at affordable costs. Increased deployment of AI shall help in changing the traditional product design and help the policy holders avail of customized insurance plans. The AI should enable us to identify and design bespoke insurance plans for certain categories of customers based on historical data and needs, as against the parametric insurance for the masses. Also, customers will be encouraged to choose a plan which is suitable for their needs and not pay for the services which they might not utilize. As telematics and in-home Internet of Things devices proliferate and pricing algorithms mature, insurance industry would reach a position where we issue instant quotes and policies to a wider range of customers. As regards distribution, the agent of the future should not only sell policies, but also add value by helping customers manage their portfolios of coverage across health, life, mobility, personal property, and residential property. Insurance should transit from purchase and annual renewal model to a continuous cycle, as product offerings constantly adapt to an individual's behavioral patterns. Highly dynamic, usage-based insurance products should proliferate. Parametric cover must be available for masses. Prime Minister's Jeevan Jyoti Bima Yojana, Prime Minister's Suraksha Bima Yojana, Prime Minister's Fasal Bima Yojana are classic examples. Insurance awareness is important to increase the insurance uptake. A comprehensive awareness campaign which explains in detail the importance and benefit of the insurance can help increase its acceptance to the potential population for demand generation. However, it must be accompanied with ensuring quality and timely delivery of services which will improve the policyholder's satisfaction and build trust and confidence on the insurance services as a product. This is an opportune time when there is strong economic resilience despite the global headwinds, expansion of the middle class, a rise in disposable income, shifts in discretionary spends, young population and tech-savvy millennials, to increase the pace to deepen the insurance premium, which is currently at 4.2 as compared to the world average of 7. More players, more capital, and more distribution channels, more products, more competition is necessary to provide insurance to 140 crore Indians and for their assets and their businesses. Towards this objective, various steps have been taken by IRDAI to promote healthy growth of the insurance industry, rationalize regulatory framework, and reduce compliance burden of regulated entities. As with any financial product, insurance is also prone to frauds. In order to ensure that frauds do not impact genuine customers, it is necessary that the finance industry shares fraud data not only across its individual sector, but across the sectors. Insurance Information Bureau, which is something which has been set up by IRDAI, is using the data on frauds across insurance companies and is developing fraud prediction capabilities. We are also looking to collaborate with other regulators to make the financial world fraud-free. At the end, I would like to conclude by saying insurance for all does not have to remain a distant dream if we focus on leveraging technology, building distribution networks, offering universal insurance, and ensuring affordable pricing. The time has now come to reimagine insurance for all by 2047. Thank you very much.
There's a quote by Bren Brown which says, stories are nothing but data with soul. But Mr. Joshi, what we witnessed today is an epic delineation of how data can weave a powerful story. And for me, the greatest takeaway was India to be touted to become the 6th largest insurance market by 2032. You put out your views in such an eloquent fashion, but I think I can't do justice to all the technicalities that you included. So can I request Mr. Shailesh Dobhal to actually render the vote of thanks and also crystallize the key takeaways from his session. But once again, can we give him a huge, huge, huge round of applause, ladies and gentlemen. Mr. Dobhal, over to you.
Thank you, Ridhima. And thank you, Mr. Joshi. That was really a very deep, rich address. Like Ridhima said, how do you sum it up? To me, the entire address can be in 4 parts. You very eloquently gave a prelude of the insurance industry's statistics and goals, where we are, the number of policies that we already sell. We need to be the 6th largest insurance market in 2032, life, health and property insurance for all by 2047. And then you went into the role of insurance in not just very operational areas like, developing the bond market, but also how insurance can leverage the demographic dividend of the country, the role of insurance in national building. And then you took us as to how that can be done, And essentially there were 4 pillars. You said awareness, technology, partnerships, and most important is appropriate regulation, which IRDAI is so forcefully driving, You also spoke about how honesty and good behavior needs to be at a premium. I don't mean at a high premium, it needs to be at a low premium, and you gave those examples. Thank you so much for joining us and sharing your views with us, with this audience and thousands others. Thank you, Mr. Joshi. Thank you so much.
All right, thank you, ladies and gentlemen. Ladies and gentlemen, we will be shortly beginning our next set of panel discussion at sharp 12 p.m. at this conference hall number 1. We're going to be witnessing a very important conversation between the mavericks, the movers and shakers of the insurance industries. We'll be having the MD and CEOs of some of the biggest and the most revered insurance company chair the panel discussion. So please be back at sharp 12 p.m. I'll see you on the other side.